Today we're talking about the idea of trading in a channel, a consolidation area, having patience when it comes to trading, and talking about, really kind of shifting those odds in favor of whichever trade, every way you're working towards. If you want the stock to go higher, you're waiting for that confirmation that it's going to go higher. And then if you're hoping the stock goes down, which I know a lot of people don't like to talk about, but if you're shorting a stock and you're waiting for that confirmation out of that trend break or out of that consolidation area, well, we're going to talk about that right here in this video, kind of showing you guys how to identify this, how to go about it, and how to really kind of focus and how to be patient when day trading, all right? We're going to do it right here. This applies to swing trading. This applies to long-term investing, all those fun things we're talking about right here in this video, so make sure you guys stay tuned. All right, so today I want to make a video talking about channels, right? Why you should not trade channels in terms of looking for breakdowns or looking for breakups. If you're going to trade a channel, you should obviously be trading off support or resistance in terms of being long, being short. But the problem is you really have to sometimes just sit back and wait for these channels, this sideways price movement, this sideways price action to just figure out which way it's going to go, because there's no real clear advantage. Like, especially right now, looking at Bitcoin, I'm using Bitcoin example because I've just been trading a lot of Bitcoin lately. When I'm trading and I see this type of price movement where we're just going sideways, I've got to ask myself, do I have a clear advantage to taking a trade? And that's really what trading is all about. When you're trading, we're not, number one, we're never going to always be right, and we're not always going to be wrong. Or right or wrong. You know what I mean? That's what it comes down to. A lot of people will say there's a 50-50 chance that you're right, that you're wrong with trading. If you enjoy these videos, do me one big favor, hit that like button, subscribe button, all the buttons down below. Let's keep going. Let's keep this party going. But the secret to that is letting these setups inside of the movements kind of figure out which way they're going to go in terms of letting the market decide. Is it going to go up? Is it going to go down? Do I need to just buy? Do I need to just jump in here right now? Or should I wait for a better opportunity? And that's really what it comes down to with trading, is waiting, being patient, waiting for opportunities to unfold. Like yesterday, I had a really good trade. You guys saw the video, how easy it was, how confident I was in the move, because what did I do? I let this formation, this pattern, play out. I let it break to the upside, show me that we had momentum, show me that we had a breakthrough resistance being this area here, that 41,055 area. So you can see we had that, overall ascending triangle. You want to call it a bull flag, whatever you want to call it. In general, we had this pattern, and we've seen this pattern over and over with stocks, with futures, with Bitcoin. Pretty much anything that's trading, you'll see patterns like this, where you get this big move to the upside. This is basically our pole on the flag pole. And then we got the flag forming, and then we get to the break to the upside. And what do? I wait for this formation to resolve, and then guess what? I jump in and I hammer it, right? I jump in and I make money as this is breaking to the upside. And I talked about this in the video yesterday when I showed you guys the trade live, how confident I was in the trade, because what did I do? I let that setup really just go like, hey, Patrick, you want to get in on this. You want to take this trade. This trade is going to be so easy and so good that you want to take this trade, right? But right now, for me, I've been sitting here the last 24 hours since we had this big move up there to the $42,000 area. Since we had that move, guess what? We've just been in a channel. This sideways price action channel. I'll draw a line here. You guys can see a little bit better what I'm talking about. We've got this channel going on right now. We'll just call it like this $42,000 area, that whole dollar. And I talked about that in the video as well. That whole dollar area is always going to be mental resistance. It's just going to always kind of create price deflection, whatever you want to call it. It's going to create, movement in the price of the stock or the Bitcoin or futures, whatever you're trading. It's going to create some type of kind of hesitation for people to either buy or sell based on those levels, and that whole dollar being $42,000 or $41,000. And you can't deny the fact that, look at this, we've bounced off 41 multiple times. We've bounced off 42 multiple times. So when people say, well, you don't know what you're talking about. Well, this is a pretty clear example that these whole dollar areas end up becoming support resistance even when they're not support or resistance, just because mentally people are like, well, I'm gonna buy right at 41, or I'm gonna sell if this pushes a 42 and it can't go higher. So people just mentally have this emotion attached to these whole dollars, and right now Bitcoin is right in the middle of this channel. So for me, I might as well just go and flip a coin, right? I might as well just flip a freaking coin at this point if I wanted to make a trade here, because I really have no clear advantage, because I know, what have we been doing? We've just been bouncing in this channel. We've been bouncing and bouncing, going sideways. If you look at the smaller time frames, 15-minute chart, you'll see same price action. Obviously we're just bouncing, we're bouncing. So if you were, number one, if you're going to trade inside this channel, first off, you definitely do not want to trade anywhere in the middle here. There's no advantage. Like I said, there's no advantage for me placing a trade in the middle of this channel. Now, if I wanted, to short the top of this channel, thinking that the price is going to move back to the bottom of that channel, I could do that and then just place my stop basically above that channel if in case it does break out. And the same idea if I'm going to get long on this channel, well, at the bottom, if I get long at the $41,000 area, well, then I'm going to put my stop right at the bottom of that channel. And the thing is, sometimes even stocks will go sideways for months, for weeks, for days. So these channels create opportunities to either short or to buy, things like that. But in general, if you're really looking for the solid, confident move, if I'm really looking for like a really good price action move, then I want to see the price move out of this channel, because number one, I know that if we get volume, we get momentum, the price starts to break through the top of this channel, there's a very, 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 very high likelihood that the price continues to go higher to 43,000 or to wherever the next resistance is. If the price breaks below this $41,000 area, I know that there's very, 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 very good chance that the price would then move lower. The one thing that I do want to point out here, and this happens to people, and it's happened to me before, and I've learned in time what not to do. How do you avoid a fake out? How do I avoid getting faked out if we get a move to the upside or a move to the downside? Because sometimes you'll get a candle, like let's just you get a wick. That candle just kind of pushes through that resistance, and then all of a sudden it just gets slammed back down. So you get a bull trap, or you might get a bear trap to the downside. The thing about this is if I'm going to get long to the upside, let's say we break 42,000, I'm going to get long there. I really want to see this price movement. Like I want to see the price hang around that area over, having like this where we just drop and have a quick drop, because I then, I want to be careful, because if we just get a quick drop to the downside, if we get a quick pop to the upside and we don't really have any good price movement in that area, that consolidation, well then it's possible that we're going to get a fake out. And the thing too is, obviously you're going to have, smaller bull flags or bear flags on a smaller time frame. Like if we look at the 5-minute chart, look at the 5-minute chart here. Look at the 5-minute chart here. You see how we pushed up to that $42,000 area here. Now, the thing is, we pushed up to the 42,000. You can see how we're already kind of overextended to the upside here on the 5-minute chart. Just kind of pushing up, not really having any good pullbacks. We had a nice little pullback here. We kind of pulled back to this area there. We started to kind of really hug that area there at 41,900. So for me, at that point, if the price did break out of the channel, and I see that we've kind of like really established, some good price action in that area, if I see that we are now breaking out of that channel, well, guess what? I'm then kind of feeling more confident in the idea this is going to break to the upside and go. Some people, out there would say that you could wait for the retest. So if the price movement, let's say, the price moves above 42,000 and it starts to go higher and then it pulls back and it turns $42,000 into a dip area, a support bounce, that's always going to be very bullish. It'll be very bullish if a stock, number one, if it breaks through resistance and then pulls back to that resistance, turning that resistance into support. All right, that's always going to be very, very bullish. Same idea if it breaks to the downside. If we break below 41,000 and then guess what? And then we push back to 41,000, breaking down and then pushing back up, we're turning that $41,000 into resistance. Well, then, my friends, it's very, very bearish because it's basically telling us like, hey, the price moved below support and then pushed back to that support area, but guess what? It got denied once again. So that's also another way you can enter a trade. And like I said, this can go for stocks, for futures, for options, for anything you want to trade. These channels, these patterns form on every single chart. Every chart that there is in the world, you're going to have patterns, you're going to have channels, you're going to have consolidation, and understanding how the market moves, how the price is moving, in these waves. You get these waves. You're never going to just get like a straight moon shot, which I probably shouldn't say that because, sometimes it happens every once in a while. But from a trading standpoint, we like to see these areas of consolidation because the longer that we're consolidating in that area, it's giving us confidence that if we break out of this area of consolidation, well, that's the direction of the market at that point. So if we break to the downside, if we break below 41,000, then we should expect this to pull back. I would put this like at at least 40,000 being that next whole dollar area, which was previously resistance area. So 40,000 would be kind of my target if we break below 41,000. The thing is, if we break to the upside, it's kind of in reverse. So if we break over 42, well, then I would expect 43, 44 being our next areas. So really, the longer that this consolidates, it's going to basically just confirm any type of move that we get. If we get a move to the upside, it's going to confirm that strength, that power, because we have that very, very good consolidation area. If we get a move to the downside, well, then it's telling us like, hey, the buyers are exhausted, momentum is shifting, we're becoming bearish, and this is moving to the downside. So trading channels is some people would say it's easy, like they like to trade channels, but for me personally, I'm really waiting for the resolution out of this channel, out of this consolidation, because I don't want to just jump in here, and especially like right now, buying the stock or selling the stock right in this area, in the middle of this channel. I mean, it's basically at that point you're just throwing dice. You might as well go to Vegas and bet on black or bet on red at that point. But if we break to the upside here, we break over 42, well, that's telling me, number one, that the odds of this going higher are going to be better than 50-50. And that's really what trading is all about, right? Your 50-50 chance of just rolling, black or red, playing roulette, that's 50-50. Well, I guess it's like 49-40, right? It's like 49% because you have green, you have the zeros. But in general, you get what I mean. Pretty much, if you're flipping a coin, it's 50-50 chance. And that's really what you're getting when you're buying or selling any price, anything right in the middle of a channel. If this breaks to the downside, well, now my odds of this going lower and continuing that momentum to the downside, those odds are going to, I don't want to put like numbers out, but you're looking at like 70% odds that this does move to the downside. So right now we're consolidating, we're going sideways, and we're waiting for a resolution. Patience, my friends. Patience, patience, patience. I cannot stress that enough with trading. At the end of the day, the most profitable traders in the world, I will say it right now, I'm not even going to say that I'm one of them, but in general, the best traders in the world are the guys who have the most extreme patience, the most extreme rules with trading. And that's very, 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 very important to understand that trading, just because the market is open, it doesn't mean that there's actually a good trade. A 50-50 chance that it goes up or down is not a good trade. A 70% chance that this is going to go higher, that's a good trade because I can basically be on that side of the odds. If the price movement is moving up, well, then I can be like, okay, the odds of this moving higher are much better than it moving down because we've now consolidated in this area. We have momentum, we have volume, we're getting that move to the upside. And again, this applies to stocks, to futures, to options, to cryptocurrency. And it's really just a very simple idea here. And a lot of people overcomplicate it. If you're going to wait, if you're going to trade, you got to have patience. Because that patience is going to pay you in the long run, okay? And that's what it's all about, my friends. If you guys haven't already, do me one big favor. Hit that like button, subscribe button, all the buttons down below. I'll talk to you guys later on.